Morning, everyone. How you doing today? Michael Zuber. December 31st, 2021. This is the last day of 2021. I want to thank you for being a part of another amazing year. One rental at a time is continually helping people. I want to thank each and every one of you for the daily support. I want to thank you for the private notes. I've shared a couple of them in the last couple of days. Let me just tell you that those notes that you send me on Facebook Messenger, IG, email, whatever it happens to be, when you tag me on IG with a selfie, any of these things, I want to let you know that those mean the world to me, right? Those, I don't know what they're called, posts or cut and paste that I've now shared with Anna and then yesterday with the three amigos. Those are why. That's why I do what I do. I believe it's why Dion, Anna, Matt, why all of my experts come back is because we're trying to help you. None of my experts that come back every week need to do it. None of them need to give us an hour, but all of them keep coming back. So thank you for sharing the messages. Thank you for doing the work. Thank you for being a part of this. Let me congratulate some people. Patricia, congratulations. Folks, people are doing one rental at a time around the world. Patricia is in Sweden, and I've given her a card. And it looks like it takes $1 to send postcards to Sweden, just in case you're wondering. Abel, congratulations. Abel, congratulations. Rodrigo, congratulations. And Kaushik, Suparna, and Isha, congratulations. Your guys' cards will go out in the mail today. Thank you for being the last set of 5 to count for our challenge. We have, 5 months left. I believe we're going to be over 400 when I do my tally on Sunday. But again, congratulations. Thank you very much for being a part of this. I have fun every day. Hopefully you do too. On to some business news. Remember, today is the last day to get my amazing course, How to Get Started One Rental at a Time at $299. It will be going up tomorrow. As my mentoring course. My mentoring course is the exact same $299 course, except you get 30 minutes of one-on-one time with me that you can use when you are ready. I think that is something. I will tell you that the mentoring course at $599 is going up the most. I am seeing a dramatic increase in people asking for that, which means I need to control my time going forward as I love it. But I don't want 5-6 hours a day doing mentoring calls. That one will be going up. So if you wanted to get it and use it sometime next year, today's the day, $599. That will be going up the most tomorrow, as is my course, How to Get Started One Rental at a Time. It will go up tomorrow as well. Remember, you get the free Facebook group with it, which is worth the price of admission. Why is it going up? Because I have a long list of additional bonus content coming. You can be looking for some strategies with experts in Burr. We have some depreciation discussions and many, many more topics. Again, really look forward to adding more to that going forward. On to the news of the day. It looks like people are starting to talk about Chinese, more specifically the Chinese consumer. If you've been watching my channel for any length of time, I told you that's where the pressure point was. All this other nonsense around tech stocks and tutoring and attacking billionaires and Evergrande, all of that nonsense is smoke. The fire is consumers. Looks like the Chinese government is now admitting it has created a, what do they call it? A triple pressure. Triple pressure. 3 things. 1, supply shocks. Again, you have to remember that China has instituted some of the zero tolerance things, which is obviously a problem for them, as it is for the rest of the world. Weakening expectations. Right, they are looking into the future and seeing less demand, a la property sales down 15 or 16%. However, the biggest problem, the one that they did not expect, and the one I told you was coming, was shrinking demand. Folks, the Chinese citizens are no different than Americans, than Australians, than Canadians, than whatever you want to call it. If your financial world is shook, if you are unsure of your job, if you're unsure of your wealth, if your 401k turned into a 201k, whatever it is, if you are shook, you're going to stop buying Nikes, you're going to stop buying Starbucks, you're going to stop shopping on Alibaba. And that's what happens. People are predictable. You can't keep kicking them and not expect them to retreat. I don't know why it's a surprise, but yes, I think the Chinese citizens are on, frankly, revolt because they have seen their 40 years of belief in property being the way to wealth, frankly, get destroyed. It's not cracked, it's destroyed. So I believe they are going to have a heavy price to pay going forward. So again, they are asking, when will the Chinese citizens pay up? I don't think they're going to shop for a while. I think when you are scared, it's not a day, a week, or a month. Again, there were generations that bet on housing as their retirement, their version of a pension. And now they're looking at going, well, that sucks. And now their kids are seeing that and their grandkids are seeing that. They are in for perhaps some significant things. Again, I would argue that the Chinese citizens are afraid, which is never good for spending. They are nervous, never good for spending. And they're not sure what to do. Again, not very good. Again, remember what we brought you, I think, the other day. Fitch, which is a one of those analyst companies, they talked about if they see a 15% drop in property sales. Remember, folks, it's not net worth, it's not income, it's the cash flow statement that is going to kill Evergrande and its peers. Because if you stop selling property, you can't pay your bills, you can't pay your employees, and you can't pay your suppliers. And oh, by the way, you can't pay the government for taxes and all that good stuff. It's ugly. Cash flow is what is going to kill Evergrande and its over-levered peers. Fitch is saying that at 15% decline in property sales, as many as a third of their property developers go poof. I see a 15% decline in property sales is a layup. They're going to have to start giving this stuff away because, again, the faith in these is shattered and it doesn't rebuild in a day or a week or a month. There's a lot of videos out here recently about California losing population. Again, I want to call out the fact that I talked about this months and quarters ago. The fact that California is losing population shouldn't be a shock to everyone. It's a very expensive place to live. It's highest taxed, I believe, either us or New York. I think it is. I think we're the highest taxed, which is not an honor you would like. There's been significant concerns of safety and all of this. And also, I would love to blame Gavin Newsom for all of this. Obviously, I'm not a Gavin Newsom fan. However, he's only one of the many problems. I think the biggest problem in California is not the 1 million people that have been lost in the last 2 years. It is actually the other variable. It's the fact that we've seen 43% decline in migration to California. As I've shared with you many times, California has ridden the wave of PhDs and masters and computer scientists and biotech and all of these folks coming to make their money as they exit school. That has fundamentally broken. California is going to suffer. It's going to be years in the making, but we are going to suffer because we're not getting the next generation. They're going to Texas, Austin, Nashville, Miami. The fact that California is on the decline as far as I'm concerned, but it will be years in the making. It's not immediate. People that talk about a 50% decline in California in a year are uneducated and doesn't know what's going on. It will be years in the making. And again, it can be reversed. It can happen, but this is not a trend that is good. This is more about other areas stepping up than Gavin Newsom being the problem. Believe me, I would love to point at him, but this is more about Texas attracting and Miami attracting and Nashville attracting. You can just make your money elsewhere, right? You don't have to be in the Bay Area or Southern California or whatever. So again, I think California is on a slow decline. for years to come. Looks like the CDC does not like cruise lines. I don't know if you saw this. I don't know if anybody even listens to the CDC anymore. They're all over the board. But yep, the CDC says, you know what? Even if you're triple vaxxed, don't go on a cruise. Okay? Triple vaxxed, don't go on a cruise. I don't understand what's going on. Pretty crazy stuff. Yeah, I don't know. CDC, the WHO, just organizations that seem to be yanked and pulled by other things. Craziness. 2022 recession. More and more people are suddenly seeing that I have called this as well. Again, as you know, I think people are going to look at the numbers for Q4 and say, wow, 6% GDP growth. Awesome. We are booming. No, folks, I do not believe the U.S. economy is booming. I believe all you have done is you have that last sugar high. We had helicopter money all year. We had a holiday that we didn't really suffer or we didn't really celebrate last year. People had extra money in the bank and they're like, you know what? Screw it. I'm going to go shopping. I'm going to buy early because of all of these shortages. So we will see retailers report amazing numbers. We saw Americans spend, I think, an extra $1,700 that they didn't really have. Q4 is going to be great. However, I think it is at the detriment to Q1, Q2. Q1, Q2 may be positive GDP, but given the 6, 7, 8, 9, 10% inflation, as you know, it's really negative, but they won't report it that way. I'm very nervous about Q1, Q2. Again, I have called it now for 6 months. I believe the economy slows right as the Fed raises rates. If you've been watching my channel, you know that that's what I've been calling for, and I think it's just going to happen. So it's going to be very, very interesting. Again, Q4 booming economy. Yes, the consumer is spending. Check. Stock market at record levels, specifically S&P. S&P is up 27%. Check. Inflation is raging. Check. Wages, jobs. Check, check. So again, kind of feels good, but I think it's smoke, mirrors, sugar high. Doesn't feel good for Q1, Q2. It's going to be, I don't know. We'll see. It's right around, it starts tomorrow. So, God, Q1 starts tomorrow already. Pretty crazy. What else do I got for you? The last thing I want to say is I hope 2022 is what you expect it to be. For many of us, 2020 and 2021 weren't all that great. I think we need to own some of that. I think a lot of a year is what we make of it. If you want 2022 to be different, I guess I got good news, bad news. If you want 2022 to be different, what are you going to do different? Waking up tomorrow doing the same things you did yesterday, probably not going to make it different. You want to lose some weight? Do something. You want to make some more money? Do something. You want to learn real estate investing? Do something. So again, if you are ready to get out of the stands and stop being a spectator, I would love to help. How to get started one rental at a time, and the Facebook group is amazing. My hope for you is you get to learn average. Again, not all markets work. Yeah, some of them are very expensive with low yields. But do you know? We have talked to people. I shared with you yesterday, somebody did a deal in Vegas, in Dallas. It can happen, but you've got to do the work. If you're at 0, I hope you get to 1. If you're at 1 or 2, I hope you get to 4. If you're at 4 and you choose to go higher, I hope you do that. If you have 10, 15, 20, you've been doing this a while. Look at your portfolio. See if you want to reposition. Time in market beats timing the market. Is it time to 1031? Is it time to reposition debt? Right? All of these things. 2021 for me, pretty good year. Pretty good year. I got to help a lot of people. The impact, I think, of one rental at a time is growing. I think I'm getting better at asking for selfies and things of that nature. But again, to help 1 million people, I need your help. I need you to like. I need you to subscribe. I need you to leave comments. Do me a favor. If you're still watching this video, everybody should leave Happy New Year's ORAT in the comments below. Happy New Year's, one rental at a time. You could just type in ORAAT. I'd like everybody to leave a comment below. That way we can get everybody wishing each other Happy New Year's. Again, you're not wishing me Happy New Year's. You are wishing the entire ORAT community Happy New Year's. Let's blow up this video with comments. Again, share it if you like this content. And I saw a question about Brian Lebo. He and I are talking Vegas on the 3rd or 4th? Wednesday the 5th at 11 a.m. So I'm talking to Brian here next week sometime. So again, folks, remember, leave comments below. Have a wonderful day. Like, subscribe, comment. Take care. Go make some memories. Take some pictures. Do some good stuff. Bye.